Hi there traders, welcome to this FXDD video. My name is Chris from Elite Currency, and this time we're taking a look at the euro dollar and pound dollar on the 25th of January. Before we take a look at the charts though, be aware of this risk disclaimer. Please pause the video to read the entire disclaimer. It states that trading for exchange in specific is considered high risk. Please seek the advice of an independent financial advisor for more information on that. All right, this is the euro dollar daily chart, and sure had a very bearish candle yesterday. That definitely surprised me. I was more bullish on the euro dollar, and that didn't really play out. The euro dollar fell a lot more than I expected. I thought price would bounce around 114, 113.50, but it went all the way down to 113. Now it hasn't broken below the bottom of this zone right in here, so I still think that this is a bullish reversal spot. Anywhere if it stays above 112.65, I still consider it to be more of a bouncing spot. So let's see if we get the bounce. I'm not sure if it will happen today. It might be at the beginning of next week, because yesterday was a pretty bearish candle. So I think that this could still be a correction for maybe one more lower low. That could complete the zigzag to the downside, and I think that could be maybe the bouncing spot for upside. So I'm not sure if we'll get a reversal right now. It's right at the 21 EMA on the 1 hour chart. I think this could be resistance, and price might still make a lower low at around 112.75. But if my analysis is correct, then I would expect a bounce at this zone right here, indicated by these two lines, after the lower low, and we should see a reversal. Let's see if that happens. For the moment, definitely bearish price action, but I don't trust this this spot for a bearish trade unless we get a bearish candle clearly closing below 112.60 with a close near the low. That's what I would consider a breakout candle on the daily chart, and of course that would change perspectives, and I would then look for a bearish continuation in the next days, and I would expect price to fall maybe even to 110. Of course, in that case, the downtrend is highly likely. But unless we get that daily candle with a clear close below the support of this sideways zone, of this consolidation zone, I am seeing this as a bullish bouncing spot for at least a return back up to 114.50, if not 115.60, or even up to 117.50, 118 here, as you can see. Those are the targets you can think about if we do get the bullish bounce and reversal. So let me put that with arrows, something like this: break, look for a pullback and continue if we get that break. Or if we get one more lower low like this, I'm looking for a reversal back up to here, look for a flag and continuations basically for these targets. That's kind of what I'm keeping an eye on for as a reversal. I don't think the reversal will happen necessarily today. It could, but trading against such a strong candle of yesterday is not advisable. I would rather wait for today to finish. Take a look at how today's daily candle looks like. If we get bullish engulfing twins, that's great. Then look for beginning next Monday. I'm going to be looking for a pullback and a continuation basically. But today I think it's too risky for my taste at least. I would rather wait for a lower low and see how price responds to 112.75. So if we get bullish engulfing twins on a 4 hour chart or 1 hour chart at 112.75, I might consider it. It is Friday though, so from this perspective, I might wait till Monday as well. If we get a break above the 21 EMA on the 4 hour chart, let's take a look at this 4 hour chart. We have this nasty consolidation zone, and we had a good move to the upside and a very lengthy correction. So if you get a break above the 21 EMA, I think that could work out, but we had one already before and that didn't go anywhere. So it could be better, rather than the first break, rather to let it break, wait for a pullback and take the second break. That's what I'm going to wait for probably. If we don't get the lower low, right, at 112.75, then I would definitely wait for the second breakout rather than taking the first break. So the 21 EMA on the 4 hour chart is important, but rather wait for the second break. So that's about it. I think from the euro dollar, I think I mentioned everything I wanted to say for the moment. Let's take a look at the pound dollar now. All right, so yes, we had a pullback after breaking through 130, and if you were looking at my other videos, perhaps you heard that I was looking for a continuation, that this could be a retracement within the uptrend. So I had a fib from here to here, and I was looking for a bounce at one of these fibs. So it bounced roughly at the 38.2 fib and the 21 EMA and continued for a higher high. It reached in the meantime about 131.40-ish. So as indicated, we're getting a continuation of the uptrend. I still think that there could be one more pullback and continuation for one more higher high. It's possible, and we're in a very, pretty sturdy momentum, bullish impulse at the moment. So I think that it's possible that the price might break one more higher high, and we do have some space until we hit resistance on this weekly chart. All right, it's around 132.50. So still some space left for continuation, but I do think we'll get some kind of consolidation zone here at this moment. Of course, Brexit news can play in at any time. Be aware of that. Be careful of that. And I'll probably wait with trading the pound until we get a clear bull flag or some triangle pattern, for instance. Then I would wait for the break to the upside. So I'm not going to trade the pound until we get a clear kind of pattern at the very minimum on the hourly chart. Something maybe like this, down, up, like a triangle, or otherwise something like a flag, as I already indicated, like this. And what would be the best fib? Well, let's take a look at this fib right here. It looks like 5 waves have been completed from this spot. 1, 2, 3, 4, 5. Pretty neat. So let's use that fib. Let me put it to the very bottom. There we go. And what could be a good fib retracement level? Well, the 38.2 definitely depends also how it moves, how price moves towards the fib. Of course, if it falls like a brick, then be careful, because that could indicate a reversal. However, if you see a downside, a bounce at the 23.6, then it move down again like this, and it slowly gets to the 38. That's the ideal scenario. In that case, a reversal to 38 or 50 fib is likely for one more push up and one more higher high. And the target could be around 131.70, 132.25, 132.50, maybe even 133 if it really extends beyond a little bit further. If the price shows more momentum, all right, then it can go, of course, to a higher target. That, in turn, once it gets to these targets, could be a bearish reversal zone, as price might complete a wave A, and we might start then a bearish wave B, and before it goes up for perhaps a wave C. That could take place. An ABC could be in the picture here, but let's see first when wave A finishes. I think that there could be still one more wave 4-5 within that A, but if it shows a lot of momentum, or if it breaks below the 50 fib, then in that case, something else is going on, and we might be getting a bigger retracement or reversal right away on the pound. All right, more webinars with FXDD. Check out these links here. Live trading at the top, educational webinars at the bottom. Both highly interesting. Definitely recommend them. Wish you, in any case, great trading. Thanks for joining, and see you soon. Cheers.